So how does a company with an absolutely terrifying trailing PE ratio of like 94 get labeled by Wall Street as secretly undervalued?
Right, it sounds totally
I
crazy.
mean, today we are looking at Advanced Micro Devices, AMD, and it's closing at just over $245 a share, $245 over 4 cents to be exact, as of April 10th, 2026.
Which is just a massive number.
Huge. And, if you follow the semiconductor space at all, you already know the stock is riding this massive structural wave of artificial intelligence demand. And
But the narrative isn't as clean as the bulls want you to believe, yeah.
exactly. Looking at the fresh stack of financial data, technical charts, and analyst notes we pulled for you today, there's a real tension here.
Oh, absolutely.
Are we looking at a generational strong buy that's, fundamentally restructuring the tech landscape? Or is this just an explosive value trap waiting to crush retail traders right before a fall?
It's really a fascinating paradox right now.
Hmm.
You have institutional buyers acting like the stock is a massive bargain, while at the same time, traditional valuation models are screaming that it's priced for absolute perfection. I mean, when the market expects a company to perfectly execute a multi-year technological revolution, any slight misstep completely breaks the physics of the stock price.
And that tension is exactly what we're breaking down for you today. We're going to strip away the AI hype and look at the actual fundamental bedrock.
Yeah, the real numbers.
Exactly. The underlying market psychology driving the technicals and, well, the very real physical bottlenecks that nobody seems to be talking about.
Which is the most important part, really.
Definitely. But before we jump into the numbers, a quick reminder to you listening, make sure to like and subscribe to our deep dives.
Yeah, please do.
And we legally require you, well, okay, just kidding. But we strongly encourage you to leave a comment with your feedback on today's debate. We want to hear if you are buying the breakout or waiting for the breakdown.
The retail perspective is a critical piece of this puzzle, especially when we get into how momentum traps actually function in a market like this.
So true. So let's start with the foundation, because before we debate future promises, we need to know what kind of runway the company actually has right now.
Let's look at the bedrock.
Right. I saw their latest numbers, and it's wild. Their net income saw this explosive jump from just like $854 million in 2023 to $4.34 billion by the end of 2025.
Yeah, that is not just a good quarter.
No, it's a massive structural shift in their business. The TTM EPS is up to $2.62, and the latest quarterly EPS of $1.53 beat estimates by a massive 16%.
It's incredible execution.
But, the semiconductor arms race is notoriously expensive. Does their balance sheet actually support that kind of hypergrowth? Or are they quietly drowning in debt to achieve it?
That is the multi-billion-dollar question, honestly, and the data here is actually staggering. Let's look at the raw cash flow.
Okay, wait on me.
Over the trailing 12 months, AMG pulled in a massive $34.64 billion in total revenue.
Wow.
Yeah, and they maintained a gross profit of $17.15 billion, which is a margin of about 12.52%.
That's solid.
Very. But to answer your question about the runway, you have to look at the balance sheet. They are sitting on total assets of $76.93 billion.
Okay, but how much of that is liquid?
Well, over $10.55 billion of that is purely in cash. Net tangible assets are sitting around $21.17 billion. And their levered free cash flow over the trailing 12 months is robust, hovering around $4.59 billion.
Okay, so they have the cash, but what about the leverage? Because I'm looking at their debt to equity ratio right now, and it's sitting at just 6.36%.
It's almost unbelievably low.
Right. In a high interest rate environment that seems almost absurdly low for a hardware company pushing the bleeding edge of AI.
Yeah.
It's like owning a $10 million mansion, but only having a tiny $600,000 mortgage on it.
That is the perfect analogy. And take that analogy a step further to understand the real weapon they have here.
Okay.
It's like having that $10 million mansion with a tiny mortgage while all your neighbors are maxed out on their credit cards at like 7% interest just to keep the lights on.
Oh, wow.
Yeah. When a new technology wave hits, AMD can instantly tap its unencumbered cash flow to aggressively fund AI and data center R&D. They aren't begging private equity or banks for high-interest loans.
They're self-funded, basically.
Exactly. That robust, levered free cash flow gives them an agility that legacy hardware companies simply do not possess right now.
That makes total sense. It explains the fundamental engine. But pristine financials don't automatically mean you should buy a stock today.
Definitely not. Timing is everything.
Right. We are looking at an asset that has seen a massive triple-digit swing over its 52-week range. I mean, it bounced from a low of $83.75 all the way up to a high of $267.08.
So what a wild ride.
Yeah, and the stock closed up 3.55% daily at that $245.04 mark. So what is the actual market psychology doing on the technical charts right now?
Well, if you look at the major indicators, the trend direction is a strong buy practically across the board.
Yeah.
The market psychology is in absolute overdrive.
How so?
The stock is significantly above both its 50-day simple moving average, which is at $224.74, and its 200-day, which is way down at $206.71.
That is a huge gap.
It is. When a mega-cap tech stock stretches that far above its long-term moving averages, you aren't just looking at a standard bullish trend. You are looking at institutional panic buying.
Panic buying?
Yeah. Large funds are not waiting for healthy pullbacks to accumulate shares. They are buying at a premium because they're terrified of underperforming their benchmarks if they miss this data center shift. The MCD is at 6.47, which is a very strong bullish signal.
But hold on, let's talk about the tension that creates, because you can clearly see immediate downside support around $236.73 and overhead resistance near $249.58. Plus, that massive 52-week high of $267 is looming right above as a psychological barrier.
Right. That $267 level is going to be tough to crack.
And I'm looking at the momentum signals right now. The 14-day RSI is sitting at 71.70.
Yep.
Wait, an RSI of 71.70 means it's officially in overbought territory. Doesn't that signal short-term weakness? Like, doesn't it mean it's too late to buy?
It absolutely introduces short-term vulnerability. But we need to reframe how momentum works during a structural trend shift.
What do you mean?
Well, textbook technical analysis tells you to sell or wait when the RSI crosses 70. But in a massive growth cycle, an asset can stay technically overbought for a long time.
Because the underlying value is shifting.
Exactly. Institutions will pin that RSI high because the fundamental valuation model is changing in real time. However, the tension you mentioned is very real. It introduces high short-term pullback risk. The chart shows momentum, but it also shows tension.
Which brings us perfectly to the valuation paradox I mentioned at the very beginning. Because when you look at how Wall Street analysts are actually valuing this stock, it feels like they're speaking two completely different languages.
Oh, they're completely polarized.
Right. I mean, out of 56 analyst ratings, the consensus is overwhelmingly buy or strong buy. The average price target is up around $289.35, with a high target of $365.
Which is massively bullish.
But then you look at the valuation metrics. Their trailing PE is nearly 9.4. It's 93.89. A PE that's sky high usually screams overvalued by any traditional metric.
Right.
But then their forward PE drops sharply to 36.63. And the most intriguing part, the PEG ratio is sitting at 0.73.
Yes, that is the key right there.
I need a translation for the listener here. How can a stock with a dizzying trailing PE of almost 94 actually have a PEG ratio of 0.73, which technically means it's undervalued?
That's the whole value trap debate, just flipped upside down.
Flipped how?
Well, a classic value trap happens when a stock looks incredibly cheap on paper, maybe trading at a PE of 5 or 6, but the underlying business is actually dying out. The low price is an illusion.
Like buying a sinking ship on distance.
Exactly. AMD is the polar opposite. It looks wildly expensive looking backward at that 93.89 multiple, but it is technically undervalued relative to its explosive 5-year expected earnings growth. That's what the PEG ratio of 0.73 tells us.
So Wall Street is saying it's insanely expensive for what it did yesterday, but a huge bargain for what it's promising to do tomorrow.
Precisely. It's an explosive growth trap.
But how fragile is that promise? I mean, the valuation numbers are completely polarized because expectations for AMD's future are polarized. What are the actual fundamental arguments driving the buyers and the sellers right now?
Let's start with the bull case. It is entirely driven by AI dominance. The bulls are pointing directly at the MI300 and the new MI450 chips. AMD is rapidly stealing data center market share.
And they have a really consistent history of beating EPS estimates, too.
They do.
Yeah.
But the real lock is the strategic partnerships. They've secured long-term outlooks with hyperscalers like Meta and Amazon.
Right.
That's why you're seeing heavy buy-side interest. We're talking massive institutional blocks buying up above the $230 level.
Okay, but the bear case isn't just about a high valuation leaving absolutely zero room for error, right? Because I know the bears are pointing to a massive, glaring, single point of failure in the physical supply chain.
Yes. TSMC.
Exactly. AMD designs incredible chips, but they rely heavily on Taiwan's semiconductor manufacturing company for their cutting-edge 2-nanometer production node. That feels like a huge single point of failure.
It is arguably the single biggest bottleneck in the global tech economy right now. Software is limitless, but physical manufacturing is bound by physics. TSMC operates the only facilities currently capable of producing these 2-nanometer chips at scale.
So if there's a delay or a geopolitical issue?
The entire bull thesis freezes. It doesn't matter how brilliant the MI450 is if AMD cannot physically print the silicon to give to Amazon and Meta.
Wow. And when you have that level of physical risk layered under a trailing PE of 93, any signal of internal doubt is going to spook the market, which brings up who is actually selling.
The executives.
Right. Recent filings show executives are selling. Now, retail traders notoriously see insiders selling near price peaks, and they immediately panic thinking the executives know the ship is sinking.
Which is usually a misunderstanding of how these things work.
Exactly. Because these are planned 10b5-1 insider sales. I usually compare these to setting up a recurring automatic ATM withdrawal years in advance. It's totally standard for tech executives to do this to pay taxes or diversify, right? It doesn't necessarily mean they are abandoning ship.
I completely agree with your ATM analogy. The executives aren't actively logging in and hitting sell in a panic. But you have to look at the real risk here, which is volatility.
The optics of it.
Exactly. The optics of insider stock hitting the open market right as the RSI flashes 71.70 is exactly what traps retail traders.
How do they get trapped?
They buy in at the absolute top due to FOMO fear of missing out. Then, a completely standard, healthy technical correction drops the price to test that 50-day moving average.
Which was down at $224.74.
Right, and the retail trader panics. They see their portfolio bleeding, they sell at a massive loss, and they miss the long-term structural growth entirely.
While the institutions just step right back in and buy their shares at a discount.
Happens every time.
That is brutal. So, knowing the fundamental risks, the technical setup, the supply chain bottleneck, what is the timeline for the next major move? Are we looking at a short-term pullback or a long-term breakout?
You really have to separate the short-term from the long-term perspective here. In the short term, the outlook requires a lot of caution due to those overbought signals and the high valuation pressure.
Right, that rubber band is stretched tight.
Very tight. But the long-term outlook remains heavily bullish due to the sheer scale of AI infrastructure demand.
So what's the trigger? What's the ultimate catalyst?
Earnings date, May 5th, 2026. That will be the primary driver for the medium-term outlook.
And you know, that May 5th call is not just going to be about whether they beat the $1.53 EPS again. Nobody is looking backward.
No, it's all about forward guidance.
Exactly. It's about whether their forward guidance can justify that massive 93 trailing PE. They have to paint a picture that proves they can grow into that PEG ratio of 0.73.
And if they show even a hint of deceleration, the market will punish the stock brutally. They are priced for perfection.
Man, what a setup. Now, before we wrap up, we need to explicitly remind you listening that this deep dive is a purely analytical look at the current data and the bull and bear debate. We are just reading the map. Absolutely no financial advice is being given here.
Always do your own research.
So, to summarize, the stock is caught in this fascinating tug of war. It boasts pristine financials, massive cash flow, and incredible institutional block buying. But it is trading at a premium that demands absolute perfection in execution, with a huge reliance on TSMC.
It's a high wire act for sure.
But, you know, there is one final, really provocative thought lingering in the source material that we haven't touched on yet.
Oh, about the broader business, yes.
Right, because everyone is so completely blinded by the sheer scale of the AI hype. But AMD is a diversified company.
Exactly. What happens if we look past the AI hype and do a deeper breakdown of AMD's 2026 revenue projections? Specifically, weighing their booming data center numbers against their gaming segment.
That's the billion-dollar question. If AI data center growth slows even a fraction of a percent, can the rest of AMD's business, the legacy gaming and PC segments, actually support a $245 price tag?
It's a huge unknown.
Or has the legacy business become an anchor weighing down the AI engine? We want you to mull that over. Keep digging into your own sources, look at those segment breakdowns, and see what you find. Thanks for joining us, and we will see you on the next Deep Dive.